All right, let's jump into things. So we've got a bit of the weekend wrap. Just give us a bit of a chance, obviously, sort of see how the week sort of finished up, and it is an absolute hectic sort of period at the moment. And so hopefully try and sort of put some things together in that for what we've got sort of coming up this week, because this situation over in Middle East, for a second look, it might have just been a tit for tat, but it seems to be escalating a little bit more. And uh, I will sort of get to the news in a second, but I just did look at this a second ago. So this is the sort of weekend markets, which, generally, typically, this is the kind of thing, 0.03%. This is the kind of movements you expect with some of these things. Some of the big movers, though, oil looks like it is absolutely going to rocket, sort of come open on Monday, and gold as well, up $30 or 28 here, but more or less. And this is at this point now. So, I mean, what is it, 10:45? Who knows what's going to be happening by the time that we open these things? But certainly there's a going to be some fireworks come market open tomorrow. So look, we'll finish off sort of the news that we had just over Friday with the close, which the main sort of thing on the docket there was the consumer sentiment, which actually seems surprisingly to be quite upbeat. Obviously, we already had this revised number up a little bit, expected to be up just a touch, but coming in at 60.5. So that's a fair sort of push to the upside and a show of confidence, which, as you can see, it has not really sort of been showing a lot more recently. So despite all that, sort of, it's kind of taken a bit of a backseat, the protests over in LA. But they've also had a whole bunch of other stuff sort of spreading around the country as well. So, typical sort of thing, sort of Trump getting a lot of sort of backlash. But all in all, seems to be a fairly positive sort of sentiment, at least just based off this data. Is that University of Michigan? I'm pretty sure. Yeah, Michigan there. Also had inflation expectation, and this obviously, as you can see, revised down a little bit, and also coming in a lot lower. This is not. This is, you would say, probably a little bit more dollar positive. Obviously, people want some sort of confidence back over there. Um, but inflation expectations sort of coming down with the Fed coming up this week as well could sort of be another reason for people to sort of excuse me, sort of weigh on the US dollar. So I'll fly sort of through the news. Got a bit of China data sort of coming out 12 o'clock tomorrow. As I said, the main thing is probably just going to be sort of what's going on with that Middle East situation, that sort of tit for tat. They were supposed to be having some talks today. Iran pulled out of that. Look, kind of understandably. I think America's position with this at the moment is to use it as some sort of leverage to get them to sort of come to having a sort of come to the table, so to speak, and have some sort of discussion about de-arming. But it's certainly just a tough sort of situation. And as you can see, gold is really going to be the beneficiary of this. So if it's gapping up $30, there's a good chance we see new all-time highs, if not tomorrow, this week, particularly if the US dollar remains under pressure. Um, but yeah, so we've got a bit of China data coming out, looking like a little bit of a slowdown over here within production and retail sales. Another thing that could be weighing on Aussie a little bit there, because obviously Aussie likes a little bit of a more positive China data and a stronger one, but it's not going to be the main mover, and that's why I keep saying that the other one's going to be the Middle East situation is going to really be what's driving it. You got a bit of US data. That's about it actually, sort of through Asia and also through Europe. Bit of US data with the manufacturing index, and that's still in negative territory, but obviously slightly improved there. But the market is really just selling US dollar any chance it has. So that's certainly, even though it's a positive move, like moving in a positive direction, it's still, in a bit of a sort of negative sort of territory there. Um, Moving on, Tuesday we have the BOJ, as we always know, it's always tentative. Generally, probably coming out around 1 o'clock. I think these ones are, and then obviously we've got the press conference happening there as well. Seems like they're looking to pretty much hold. I think we've got a few banks meeting this week actually, so I think Swiss Bank might be meeting as well, and we've got the US as well. That's about it, as you can see through the Tuesday. So not really a lot going on there. Come Tuesday night, we've got retail sales over in the US. Both, so again, this is a bit of the up and down sort of stuff. So your core is looking to slightly tick up a little bit more. What am I sales? What's retail? Yeah. So look, I would say probably sort of the fact that the headline is coming in expected to come in a little bit weak. Again, not super strong for the US dollar. Like that is a major breakdown territory. It actually did break down on a weekly basis this week. It had a little bit of a spur up, which I'll get to with the charts in a moment, but a little bit of a spur up on that sort of initial attacks from Israel, but unable to sort of get that follow through into the week close. So it actually rejected from a pretty sort of expected level, which I'll get to that when I get on the charts. Moving forward, we got a little bit more US data, nothing super of note. Coming through onto the Wednesday, we've got again Asia's looking pretty quiet through this week. At least through the start of the week, we've got that China data on the Monday, but there's not really anything on the docket at all. Certainly no Aussie data there. You got a little bit of data come Wednesday morning. Not really something that I overly sort of pay attention to. CPI over in UK, looking okay, following this kind of global trend, a little bit of sort of coming down there. Moving forward, we've got unemployment claims, 248. These ones have been creeping up a little bit the last couple of prints, like these come out every week, of course. But you could see it was in that sort of like, 29, 30 kind of band for a little bit. It's not massive jumps, but it is moving in that direction, which again is not a positive sign for US dollar, the more that that sort of creeps up. So it's worth keeping an eye on that one over there as well. Already through to Thursday, and there's not a lot sort of on the docket. So that obviously opens the door for Thursday morning, 4 o'clock. You got the Fed. So expectation here is to hold again. So Trump's obviously very much sort of pushing and pressuring Powell to sort of cut the rates and that. And look, they're probably in a position where they could feasibly do it. But at the moment, it seems like they're trying to hold on. If they do cut, US dollar is going to, like as I said, they've been selling it on no matter what. The fact that they're sort of maybe going to hold might be sort of something that sort of saves it from getting absolutely destroyed. But at the same time, it's not a favorable sort of currency by any means at the moment. It's breaking down quite strongly. So if they do cut, especially if they're sort of expecting to hold, this thing will get absolutely demolished. Move along, we got employment over from in Australia. Sorry, just getting distracted there. So back down to normal. So 89,000 they created last night, which is a massive, massive outlier. I mean, when was the last time? Let's have a look on the graph. When was the last time you sort of had some numbers like this? December 21, 330. Okay, there's got obviously some sort of reason for this. This is it's a bit of a sort of maybe when they maybe December 21. That's when reopened from COVID lockdowns and everything, I suppose. So yeah, obviously that doesn't really count. But short of that, we got 100 back in March last year, and then 90, 89 that we had last week, and back to their it's an ongoing joke. Their 20,000 tip that they say pretty much every month. Their expectations are around there. They ticked up a couple of times. They were still drastically wrong here and kind of close. That was the closest they got there with the 40,000. But anyway, moving on. It's 20,000 they're expected. Look, it's been quite strong. Like honestly, I mean, this is an outlier here, but it's still coming in with pretty strong numbers. So I would say that this is going to be understated. So generally, these guys get it very, very wrong. Say it comes to 20, 30,000 or so, 30,000 plus. That could be something that sort of spurs the Aussie along a little bit as well. This unemployment rate is probably more important. Well, maybe not more important, but it's definitely worth paying attention to because that unemployment rate, if this starts to creep up, then it's got to really sort of lock down the idea of the RBA cutting sooner rather than later as well. So that's just something to keep an eye on here as well. You got Swiss Bank meeting, so they're looking to cut down to neutral or zero. Interesting. Okay, something to keep an eye on over here as well. Not really directly affecting stuff, but of course, it's one of the large banks. Just good to pay attention to what the trends are happening. And then we've got, so we've got a whole bunch. It's like nothing for the start of the week. And then we've got the Fed, I suppose we've got BOJ earlier. We've also got the Swiss Bank. We've got, BOE happening here, and they're looking to hold as well. Then we got a couple of sort of bank holidays over here. What's this one for? Juneteenth. I still don't really know what that is, but yeah, maybe it's, yeah, something for them. Founding. Move along and finishing off the week. You get a sort of manufacturing data there. Again, still in negative territory, but moving in the positive direction. So similar to what we kind of saw earlier in the week. So look, it's looking like a pretty quiet sort of week in terms of data to start it off, but the Middle East situation will be more for making up for that. Um, so we're going to have to sort of see. I mean, obviously with these kind of situations, you're expecting risk to take a bit of a hit. And by that, with the way that we do equity markets, Aussie, these things are expected probably to come under a fair bit of pressure. Gold is looking to push up, as I sort of showed before. It's almost $30 or something. It's looking to move up to the top side there. And US dollar. Now, I'll start off with DXY because this is what I was talking about here. It did make a little bit, I mean, in terms of a weekly thing, it's actually closed not as bad, but certainly in this immediate area here, you can see support, 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 whoops, support, 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 bang, moved down. And it came right back up, as you can see, kissed the underside of this range, closed that gap, actually closed the gap and plus a little bit more, I think. But then came up and then obviously, boom, rejected down into it there. So negative divergence has played out in the sense of it did get a bit of a push. This week's going to be very telling though. And the thing is with this, typically you would be sort of saying, okay, well, let's get onto a lower time frame. You can see this was the reaction. It was a gap down on open, and it was pretty much as ASX was opening. So it was about 10 o'clock that you can see here, 10 o'clock, and that's when the first sort of explosions or bombs or whatever were sort of shot, and market just went bang, and they had a big sort of buy up of the US dollar here. Because this, of course, it doesn't really show the full extent. If we get on a lower time frame, you might be able to see. But of course, you got the two markets. So this opens 15 minutes early at 9:45, and then obviously just melted down straight away, bang, and then dropped the bombs, boom, moved up over here. So it did come back up. It had a little sort of double bottom with a measured move, came up here, almost into it, but then obviously closed that out. That was the closing of the gap from the start of the week. So as you can see, pretty much closed the gap, sold back down, had a little bit of a wedge forming through here. This was just kind of signal here that it wasn't going to be going anywhere further because, again, same sort of thing, up, resistance, back to support, you attack the highs, break through, retest, the support was exactly where it should be in the sense of that was the highs there, but it was unable to get that push through here. So it really needed to sort of close that week off strong there. But you can tell with so much stuff happening at the moment, well, mainly just this war sort of stuff, people weren't sure what the hell they wanted to hold over the weekend, and it appears that sort of gold was definitely the one to be holding longs of over the weekend. So they sold it back down, and then kind of mulled around. So in terms of a sort of a daily kind of chart here, I mean, it did have a little bit of a positive start here, and it probably will get a little bit of a push up here, but this thing really needs to get back up above this spike high. So if we put this a little alert just through here, this is where it needs to be. So 98.61. For whatever it's worth, breaking war day, first initial attack, spike high. If it gets above there, okay, you could see this as a little bit of a squeeze moving up here. It is still in this negative divergence kind of area, but of course, if this thing doesn't continue and we sort of get a dribble back down to the bottom side here, this will push the RSI back down and it'll just negate this whole sort of negative divergence move here. So all in all, not looking great. I mean, if you have a look at this on a weekly, here's your weekly supports, and this thing clunk, bang, down there. So yeah, it had a little bit of a buy up and that into the end of it all, but all in all, that's a pretty ugly looking weekly candle there, and it does look like it wants to repeat this cycle and sort of maybe head a little bit lower. So we did actually find support in a previous zone that we did have marked, which you can see through here. So this has going way back to in the sort of 2020. You could see that this was obviously a resistance. It was a support before this large move up the top over here. It came in and pretty much held pretty well as a support for where it did actually find and sort of rally off for that double bottom there as well. So look, I'm not sort of counting it fully out. But it did have a little bit of weak data this week. Like a little bit had sort of two bits of data that it was looking for, both to sort of come in little bit more hawkish. Those both failed to really sort of produce the kind of the numbers that they wanted, and that's so the CPI obviously market was expecting to be a little bit hotter, which would have been sort of more dollar bullish. And obviously that missed to the downside. So, well, it did miss to the downside. Sorry, it just didn't hit. It was a, I think it came in a point hotter, but they were looking for 2 points. So market used it and they sold off through that as well. So all in all, not looking great, but at the moment, it's trying to hold out here. So I think this will be an indicator. Really, you're just sort of looking at this, like, break back above this area. Look, you got a lot of resistances and reasons to sell it up over here. But in terms of sort of downside, that's probably where you're looking to move a little bit more, just based off that weekly close. So look, we'll see how it opens tomorrow. I think sort of play it by ear, but caution for a further sort of sell down if the market chooses not to really sort of buy that up. Have a look at gold. So gold, look, it's kind of irrelevant to tell you the truth. Like in this instance, you could see that the market was umming and ahhing, umming and ahhing. It was finding its resistance and all this kind of stuff through here. This was the previous highs from back at the start of May. This is looking to open. Where are we? Oops, geez, we're even higher. This is looking to open at this stage up around here. What did it say before? Say 58 or so. So about here. Yeah. Anyway, so it's looking to open up here, which takes it well above this whole area here. So it'll leave quite a gap. So you may sort of see it dip down a little bit, but most likely what you're going to see with these things is a little push down and then a faster acceleration to the top side. We're very much in the zone of these all-time highs. So obviously back up at that 3,500. So it'll be interesting to see what happens. Should it push up over here? It certainly looks like it's going to be the asset of choice during this whole sort of war, and as long as this thing keeps escalating. If we hear anything about the tariffs, that's also another thing that could be sort of really packing it on for topside moves towards a new all-time high. Going off what we had sort of last week was we were coming down basically into this backtest area. So the two possibilities, I actually thought we would have got a little bit lower back down into these 3280s. I think we got 3290s, mid 3290s. And as you can see, structurally, that's just a back test. Put it on the daily, might be able to see it a bit better. This is just a back test of the top side of this falling resistance, and it powered through. It's going to look to gap up. I think there's definitely looking at 3,500 test moving forward here. You've got the RSI is going to be very much there to support it. This is on the daily. I can see, definitely new all-time high coming here. Move along, we got silver. So silver held up relatively well. It had a bit of this sort of rising resistance, which got kind of close to here on the daily. Back tested this zone. Where have we got this one here? Previous sort of highs from, again, going way back sort of 13 years or something like this. But all in all, look, it did move out quite strong to the top side here. It'll be interesting to see how this reacts come Monday. And there's no sort of implied opens for silver. Gold silver ratio, I think, is still basically, so prior to all this, if we have a quick look at this, it bounced off that area that we were looking at last week. So we thought sort of down into this zone and then a bit of a move up. And obviously that's what we've got here. So I would say with gold looking to sort of push up a little bit higher, we could expect a little bit higher up here, which I would say is probably going to weigh on silver a little bit more. Like silver kind of obviously plays the two sort of hands in that. It can work with the precious metals, but it can also work with the risk and industrial metal kind of side of things. Copper's a little bit under pressure, so I think silver will probably follow suit with copper and make things a little bit not necessarily falling, but I just don't see it being the sort of the metal of choice through this kind of period. I think gold's probably going to jump back into the lead as the main sort of metal runner. For now, though, it's obviously just pretty much holding that whole break to the top side there. So I would say probably, if you look at this in terms of this last move, 23% was the best it could do. So I would definitely say you've probably got some more upside, but I imagine this will probably just sort of maybe just sort of like consolidate around these highs for a little while here, maybe a back test of these previous highs around that sort of 30, 34, 34.50, or for a downside kind of move. That'll come obviously underneath this wick, 35.40 will probably sort of open the door for a little bit more downside. RSI looks a little bit cooked, and it's failed to move on so far. But again, these kind of war things and that, it's pretty hard to sort of work out, like sort of to plan too much based on these charts. Um, when you've got so much stuff sort of coming and happening sort of over the weekend as well. Because whatever you sort of draw up here, and this is why I'm kind of flying through these, whatever you draw up here is potentially going to be obsolete, um, sort of come sort of obsolete, sorry, come Monday morning. Actually, just sort of looking there, we got a little bit of a sort of rising support. So I wouldn't be surprised if we do get a break of this wick down here, then you look for buys on this rising support here. Put a little alert on it. Right, yeah, so let's move along. We've got Aussie. Aussie, it is still struggling. It's actually the first time it actually broke structure um, on Friday. So is this a Friday chart? Yeah, Friday there. So with some of these things, depending when it ticks over and that, you'll have a Saturday candle, which will be just a very small part of it for a few hours there. But if you have a look on the 4 hour, you can see that it obviously dipped down here. But this is the odd thing that sort of like, obviously Aussie being a sort of risk proxy asset, it's like, it understandably sold down, got smacked and hung around the bottom down here. But then sort of when when the US equity markets opened up, that flew back up. And obviously Aussie was like, oh, cool, sweet, we're buying risk again. And Aussie flew back up with it as well and sort of rallied, I think, about 50 points off its lows. If you look at that, 60 points off its lows. So like, really kind of disregarded it pretty quickly. That's why, to a certain degree, look, I mean, obviously there's been escalation over the weekend, but if you sort of remember what happened with the Ukraine stuff, when that sort of first kicked on, that lasted for a bit. But when the Hamas stuff started kicking off, the market actually moved on pretty quickly. And they didn't really sort of dwell on that kind of stuff so much. So, you know, this is potentially why they've just gone, oh yeah, they're bombing each other, cool, and sort of shot back up here. That and obviously because, as I said, US dollar was basically it was moving, and then all of a sudden they're like, actually, hold on, wait, we don't want the US dollar either, so they dump that and just by de facto sort of thing, it moves up. Aussie will move up from that. But as you can see, there's a little sort of step up structure that it's been following, for the better part of what's this sort of mid-April there. So for the last 2 months, it hasn't really broken this structure here. It was unable to sort of obviously sort of continue down, but as you can see, like it's gone and tested under these supports a few times, but unable to hold it. So I think this will be interesting. Obviously, sort of, it's a conflicting kind of thing at the moment because you've got, US market just doesn't want US dollars. That's what's keeping Aussie elevated, particularly while they're sort of talking about more cuts than that from the RBA. But, this is, I think, 6 days. 6 days here. 1, 2, 3, 4. Well, actually, hold on. Yeah, it's 1, 2, 3, 4, 5, 6, 7 days unable to sort of close up the top over here. And I think actually, have a look on it. No, this is the chart that I was looking at. So this is 1, 2, 3, 4, 5, 6 weeks unable to close above 65 while still testing above it. So obviously the market's grinding it back up, but as you can see, it's just found its resistance here on point where we kind of thought it would be, plus it's a 61% retracement, but it's incredibly overbought. It's been overbought since before the that whole drop down as well. It's still overbought. So should this thing start to sort of peel down, then okay, yeah, we could get these sort of moves back down to the lower side, but it really comes down to what the market wants to do with the US dollar. And if they want to just dump US dollars at all costs, Aussie's just going to keep grinding up. But should they sort of find a point where they're like, yep, cool, that's enough for us and we want to buy US dollars, I think that's when it's going to kick into gear. because as weak as the US dollar has been, Aussie is not up at 67 or 68. It's a DXY, so against all the other sort of majors, well, not all of them, but against a handful of majors, is pushing at multi-year lows, and Aussie is only able to get back 61% of its drop down from last year. So I think sort of should they start to buy up US dollar, I think Aussie is going to be in some serious trouble. That's a broader picture. In the short term, again, it's hard to really put too much to it. It doesn't look like it did rally up here, but of course, into the end of the week, people don't want to hold it because it is a risk asset. The fact that it closed at this level and sort of held up there keeps it in the game. But I think certainly if you break below 64.60, I mean, you've got a little bit of support in here at 64.40. So put it actually just underneath 64.40. I think we're going to see further cooling. So with it sort of grinding up all this way as well, it's really going to be most likely quite choppy on the way back down as well. As you can see, you've got supports, like moving all the way along. I think if you do sort of get down here, it commits to itself a little bit. We do have this kind of band down here where it's kind of like a loose channel, but every time it's come into this little band here, that's when the buyers will step back in. So it's not really sort of clean cut as in like, oh, here's a straight channel, but if it pops out the top here, they sell it. If it pops in the bottom here, they buy it. So, I mean, the main thing is obviously breaking these things here, but to break these levels, you've got to start with these smaller ones. So I think underneath 64.40, you might sort of see a little bit further cooling on Aussie. Move along, we've got copper. And this is what I was saying with copper. It closed that gap where we saw last week, was it? Last week when it closed that? Thursday 2 weeks ago. So yeah, closed the gap, and now it's basically just sort of sold down since. And obviously closing the week on a fairly sort of weak note here. Again, there's no implied opening amount for copper. So you just have to wait and see what happens. Downside, you could expect probably some support coming in around this 470 mark. Top side, I just don't think it's really this is the time to be buying copper. Given all this sort of stuff happening at the moment. Let's have a look at this on a larger chart. If this does sort of, I mean, look, it popped out the top here. We have a sort of pretty clear cut sort of resistance through this zone here at 494. But obviously it shot up here just to sort of close that gap. And if you look at the top of this one here, this candle here with a very long wick out the top, tiny little bullish body, very similar to what we saw here where it capitulated out. This is actually a bigger spike than we saw back there, and not necessarily that this is going to be the outcome to come, but it is something that is potentially going to see further downside. So I wouldn't be buying copper just at this point. And finally, we have a bit of China data, and as you can see, it's found itself a new little base here, but it's really just back into its grind mode. So it found resistance where we expected, and I thought, as you can tell with this, I thought back here, find the buyers, move back up and push through, but obviously no go. So back down here. But if you look at these three lows that it's got through here, this RSI is still moving up a lot here. So I wouldn't be surprised if we do see a little bit of push up here, and this is what's going to be a good tell for Aussie, in my opinion. If we see this start to move up here, which is obviously USD against yuan, I'm pretty sure I heard it pronounced, not the yuan, the yuan, or yuan, anyway, whatever. If we start to see a weakening of the yuan, I'm going to call it the yuan, whatever, a weakening of the yuan, that's going to put a bit of pressure on Aussie. And obviously we have that bit of China data looking a little bit weaker, sort of come Monday. But again, all this stuff really is predicated on what the hell is going to happen with the US dollar, given everything happening at the moment. I think pretty much the guarantee here is you're going to see gold push to the top side. It's going to gap up. It's probably going to run hard after that. That's going to put pressure on US dollar. Equity markets coming down. Those flows have to go somewhere. If we don't see US dollar run with gold, gold's going to push a lot harder because you're going to see US dollar sell it off. People are going to be looking for safe havens. You're going to see probably a strengthening of the yen. They're looking to hold this week. maybe not so much the Swiss franc if they're looking to cut. So I would be probably very focused. Not that I trade it specifically directly on the Japanese yen at the moment, because not everybody's going to go straight for gold. But I think gold and the yen, with the Swiss bank cutting, if they don't buy up US dollar, they're going to be looking for the safe havens. And the main four safe havens are the yen, Swiss franc, US dollar, and gold. If you take the Swiss franc out because they're cutting, if you take US dollar out because everybody seems to hate the US at the moment, or at least the currency, well, that leaves gold and the yen. So maybe a short on yen Aussie would be a pretty good trade this week, actually. Not that I cover it on this, but I did sort of note this sort of halfway through the week that it was sort of starting to move back down. Actually, a little bit of a rally up into the end of that week, which is interesting. But on a weekly, it's found itself a nice little sort of range through here. But anyway, look, it's overboard. Something to look forward. Or sorry, not necessarily look forward to, but keep on the back foot. Oil, as I said, this thing absolutely exploded. I didn't put this chart. I put this chart on X, but as you can see, this little inverted head and shoulders that we had played right out here, popping through some big areas, and it's looking to sort of gap up quite a bit, sort of come Monday morning. So I'm really just going to see how the markets open up and sort of just try and react as best we can to that there. All right, that's it from me.